Dan, welcome to the podcast. How are you?
I'm very well, very excited to be here. So yeah, thank you for having me.
Nice. And you've had lots of interviews this week as well. So I'm really excited to learn more about how both myself, but also the person listening can actually learn how to secure a mortgage, how they can buy a house, how they can start saving now, almost from start to finish. What do we need? What do we need to be doing? So as someone who helps people buy their first home, how often do you hear people say, I have no idea how I'm going to buy a house and I have no idea about mortgages?
I hear that all the time, and it's important to remember that's completely normal. Most people don't have a clue about buying a home until it's time to buy a home. Reason being, because until that time comes, it's not a priority for a lot of people, myself included. I bought my first home in 2018. I wasn't working as a mortgage advisor at that time, and I was very new to it, and it was a brand new experience to me too.
I feel like it's always something I've thought, I know I want to buy a house at some point, but I haven't necessarily made any kind of proactive decisions or actions to. I mean, I'm saving, but I don't necessarily know if I'm saving for that other than that I want to buy one. I was also reflecting on like all of my friends and people maybe in the 20s, like the person listening now as well, or even going into your 30s. And I feel like I've either got friends that are still perhaps in the local town that we grew up in, and maybe they've gone down the route of settling down with family and kids, and a few friends have maybe brought a house. And then I feel like you've got this other group of friends where I sit in, where we've all moved to cities like London where we are now, and we're renting. The rent's quite expensive, and it's hard then to have money at the end of the month to think about some of these longer term decisions. Why is it so hard at the moment to actually buy a house or consider some of these things?
It can be incredibly hard. The statistics around it can be quite frightening at the moment, especially in relation to property prices. So just to give you an example of that, in 1997, you could access properties worth less than 5 times the average salary in 88% of England and Wales. Currently, that's closer to 7%. What that means is that the majority of the UK, in terms of buying a home, is unaffordable for people buying a home by themselves. To throw a few more figures out there, nationally, the average house price is around about 9 times the average salary at the moment. In London, that's closer to 14 times. So buying in London is even harder.
9 times the average UK salary. I saw as well on social media that back in, was it 1993, it was 3.1 times the average salary, and now it's at 9 times. So there's a 6 times increase in the price of these houses in relation to the salary. What's causing that other than, I say, like potential just like macroeconomic situations and greedy landlords maybe putting up the prices, or estate agents maybe putting up the cost? Like, what's actually causing some of this?
So it's a very complex issue, and there's lots of contributing factors. One of the biggest ones, though, a lot of people would say, is a lack of new housing, a lack of affordable homes being built. There's so much demand on the available homes that historically, this has not just been happening for the last few years. Historically, house prices have always, over the longer term, increased massively ahead of wages. And unfortunately, that's continuing to be the case. So right now, that's a problem. And I do worry where that's going to be in another 10 years, in another 20 years. I do feel like sometimes if you do manage, if you're, an average sort of working class, middle class person, and if you are looking to buy a home in London, let's say in the next 10 years, you might be catching the last train out of town, because I do believe in 10 to 20 years, it's going to become extremely difficult.
That doesn't fill me with excitement, if I'm completely honest. That's I noticed as well that the average age to be a first-time buyer has increased to 33. I can't remember exactly what it was or what that is in relation to, but I remember reading that it was a lot lower, and now it's a lot older. Is that just people aren't in the financial position to buy houses when they're in their 20s, and they're just having to push it back and back and back?
I think finance is one factor of that, but I do believe that there's a few other contributing factors, such as culturally. The world is opening up now with opportunities for relocation for work. More people want to travel. The rise in social media, the landscape available to people is a lot vaster. So for that reason, I feel like a lot of people are choosing to buy homes later. And also, financially, it is getting more difficult.
I also read as well that there's a lot of statistics being thrown around at the moment, but 45 years ago in 1981, 1 in 3, so a third of 16 to 24-year-olds already owned a home. Now it's 1 in 10. So there's a huge dramatic change in like the people that are in, or of the ages of 16 to 24 that have actually purchased a house. And I think it's kind of what you just related back to. Some people are like, I want to go traveling around the world, or I want to move to a city and rent. I also think as well, and I saw this on the Up the Gains Money social media page. I'm not sure if you've heard of it.
Yes.
There was a really good post around comparing whether you should continue to rent or whether you should purchase a property. And they very succinctly in this video went through all of the, let's say, costs and potential upside of buying a house. So very briefly, I think it was the average cost of a house is around, let's say, 290 grand. So you'd put down a 10% deposit, which would be 29 grand. And plus a load of like costs and stuff to buy the house over a particular period of time, let's say 25 years on the mortgage, would equal out at about 536,000. So buying a house and keeping it for this period of time with the cost would be just over 500,000. They compared that to if you rented for the same amount of time over that 25 to 30 year period, considering an average rent cost, taking in like the inflation and all of just like the kind of considerations, the renting would actually work out slightly more expensive. However, just to make this even more confusing, they then chucked in, well, if you actually, instead of buying a house with that 30k deposit, if you actually invested that into the S&P 500, into like an ETF, for example, over that same period of 25 to 30 years at an average return rate of 8%, you'd actually then return, I think it was about 700,000. That's obviously still putting a monthly rate investment in. So very long statement or point short is the amount of investment or return investment you'd get in comparison to the cost of buying a house and then the potential selling point of that house, it still worked out in this equation better to rent over a longer period of time, and you'd have 135 grand cash left over. Now that's a very complex way of saying, should people be buying houses right now, or should people be investing their money and looking to rent and having maybe a bit more flexibility?
So I know the exact post you're talking about.
I hope I've got butchered it, because I looked at it on the train on the way here.
No. So yeah, I know the post you're talking about. Ultimately, buying or renting has always been the big debate, hasn't it? And yeah, there is simply no one size fits all answer. It's down to the individual, what their priorities are, what their budget is, and yeah, what their goals are. Culturally in the UK, rightly or wrongly, that's up to the individual. We do like home ownership. We do typically or generally look to work towards home ownership. I think that as Brits, we value security, whether it's going on, as Brits, we might go on holiday to the same location every year. We might eat in the same restaurant every week. And I think that we value the security of home ownership and the security that gives. So yeah, could you potentially invest money elsewhere and potentially end up better off financially? Maybe. Who knows? However, the fact of the matter is, a lot of the people do want to own their own homes. A lot of people do want that security. They want a roof over their heads that is their own, for their children, to build a family, to leave something behind for their children as an asset over the next sort of however many years. So yeah, buying or renting, it depends on what your goals are. buying, you may have some further upfront costs, such as the deposit. However, you will have that growth in equity in the property. We all know that property prices generally do increase over time. Renting, you may have smaller upfront costs, as well as that you may save on sort of maintenance fees if the boiler breaks, etc. However, those rental payments aren't going to be contributing towards any equity, at least not for yourself. So yeah, but it's important to weigh up the figures, have a think about what your priority is in your life, and yeah, make an informed decision from there.
It is an interesting one, isn't it? I feel like I've always grown up with this idea that a subjective but successful life at some point for me is to own my own home, raise a family in that home. And I love the idea of them being able to pass that on to my children as well. Even if logically it didn't make longer term financial sense in comparison to if I invested that money, I think I'd still go ahead and do it anyway, just because of that almost emotional tie to what I actually want, which I think is quite interesting. So let's say you're thinking, okay, I do want to buy a house. I've considered these options, but I have absolutely no idea to where to even start. What are the steps from saving your first pounds and pennies or right the way through to collecting your keys? What do people need to know?
Okay, so let's imagine that they are a first-time buyer. All right. In my opinion, there's 3 sort of foundation areas that we need to get started with: deposit, credit scoring, speaking to a mortgage advisor. Okay, should we start with deposit?
Yeah.
Perfect. Okay, so a lifetime ISA is a fantastic tool for a first-time buyer looking to make the first home purchase. It's essentially a savings account to be used for the purpose of buying your first home or for retirement. Okay, most people at the moment are looking to use it to buy their first home. Okay, you can contribute £4,000 annually. You will then receive a 25% government bonus on top of that. So for every £4,000, you get £1,000 free from the government. It is free money. It is a fantastic opportunity. Okay, if you can maximize that contribution, not everybody will be able to, but if you can, yeah, there's a lot of money to be gained there. And saving a deposit is one of the hardest parts of buying a home. There are some other considerations though with the lifetime ISA. To benefit from a lifetime ISA, you can only benefit from a lifetime ISA 12 months after making your first contribution into the account. Okay, so if you are looking to buy a home in the next 12 months, it's not for you. And in addition to that, the current purchase price cap with a lifetime ISA is £450,000. Okay, so if you're buying a property for more than that, again, the lifetime ISA is not for you. Now, there's a lot of debate around this at the moment about whether or not that price cap is suitable. In my opinion, it's not suitable. Reason being, the average age of a first-time buyer at the moment is around about 33, 34. Quite a typical age for starting a family or having a family. And if you are starting a family or having a family, you probably want a family home. Now, in many areas of London, you simply can't buy a family home for £450,000.
Not even close.
Exactly. So that's a real problem. But with that, when people are saving for home deposits, they might be saving for 5, 6, 7 years. So let's say somebody started saving for a property in 2018. Okay, and the property that they were looking to buy was £425,000. Okay, they've now been saving for 7 years. Okay, it's 2025. That sort of property that they were looking to buy might be over the £450,000 price cap. If they have been saving into a lifetime ISA, their money is essentially stuck. Reason being, if you withdraw that money for a purpose other than retirement or saving for a suitable property, there's a withdrawal charge of 25%, which essentially means you can end up with less money than what you put in. So this is a major consideration, and there are conversations constantly at the moment about whether or not that cap needs to be increased. In my opinion, it does. To throw a figure out there, 650,000 sounds about right to me. But yeah, lifetime ISA.
Okay, so the first one then, as you said, lifetime ISA, you can contribute if you contribute £4,000 per year yourself, you get an extra £1,000 given to you by the government. there's a 12-month minimum wait to be able to access that. So you can't sign up one day, chuck in £4,000, get £1,000 back from the government, pull it out straight away. Makes sense. But the limit then is a property of 450k. That's actually quite a consideration, to be honest, because if I were to start that now, I have no idea what my financial situation is going to be in 4 to 5 years when I'm 32, 33. I could be earning a really good amount of money and want to purchase a really nice property, or even a property that's £470,000, but actually then I'm going to have a 25% withdrawal charge on that money. That doesn't sound great. Like, that sounds like I'm now considering whether to put money in that or whether it's worth putting it into, say, stocks and shares, for example.
Absolutely, and that's the sort of consideration, the other thoughts that you should be having. It's more of an issue in London, simply due to property prices. Elsewhere in the country, that's less of an issue, but hopefully it's something that they do address.
That's interesting. I think that's really good for people to know as well. Okay, so if people have saved zero money thus far and they're not necessarily looking to buy a property in London, then that's probably a good choice, is to look at the lifetime ISA right now.
Yeah, a couple of other points in relation to saving a deposit. Speak with a mortgage advisor, understand or get an idea of roughly how much you need to save. Therefore, you have a target that you're working towards, and a bit of an awkward one, but find out if your parents are going to be gifting you any money. Okay, now, unfortunately, for many of us, including myself, I wasn't gifted any money, but people are gifted money. Quite a significant amount of first-time buyers are gifted money for deposits. So yeah, have that chat early, because if you know you're going to be gifted some money, that will allow you to adjust your saving plans in line with that.
Any advice on approaching that conversation with family members?
I would explain the reason, or I would explain to parents maybe why it's so important that you know, because it is so hard to buy a home in the current climate. Saving a big enough deposit is one of the biggest hurdles that home buyers are facing. So if you tell them why it's important, not so much why it's important that they gift you money, because that maybe, you know, that's not something that's not a decision that they can suddenly make. But if they are planning to gift you money, a little bit of transparency, if possible, it always helps.
I think that's good. I think approaching it, it's, hey, I don't have personally, I don't have an expectation, but it's important for me to be aware whether I am or am not getting this, so I can adjust my own savings over the next 5 years that I do look to buy a property. That makes sense. When things are inherited and gifted, are there any other considerations around tax or some of those things that people need to be aware of?
So there can be considerations in relation to gifts around sort of inheritance tax, but I would say that's sort of not my area to speak on as an expert. So yeah, I would leave that one before I start diving into too many specifics.
Cool. So then, clarifying, then there's a difference between like a mortgage advisor and then maybe perhaps a financial advisor would be able to help you more on the kind of tax processes around actually receiving inheritance money, whereas for yourself and as a mortgage advisor, that would be actually going through the process of securing that mortgage.
Yeah, so the difference between mortgage advisors and financial advisors: mortgage advisors are purely mortgages, mortgages and insurance. Financial advisors are more sort of investments, pensions, and can touch on those sorts of subjects too. Okay,
so we've mentioned a couple of steps then earlier around the ISAs, the deposit. I think credit was something else that you mentioned. So let's take the example then. You've saved a bit of money, or you've understood that you're receiving a portion of money from your family. What's some of the next steps that people need to consider or things they need to be aware of?
Okay, so I would say having an awareness of credit scoring or your credit report as early as possible is really important. Okay. A bad credit report or adverse credit history can really leave you in a difficult position when it comes to buying a home. Now, you know, I see credit reports every day. I've seen hundreds, if not thousands, of credit reports. Yeah. I would say 50% of my home buyers have some form of adverse credit. That could be as small as one missed payment on a utility bill, but it's there. Of those with adverse credit, I would say 50% of those don't really understand their adverse credit, when it occurred, how much there is, what account it was on. And that's quite a problem. Of adverse credit, some people may have adverse credit due to abusive relationships, bad breakups, job loss, but most events of adverse credit that I see are caused simply by a lack of awareness, maybe a lack of care, maybe a lack of respect for utility bills and thinking that it maybe doesn't matter if you miss a payment, but it does. So my biggest credit score tip is always don't make a mess of it in the first place. If you can be 18 years old and just be conscious of your credit, make sure that you're not taking on unnecessary debt, make sure that you are making all of your regular payments on time. By the time you get to, maybe buying a home 10 years later, you're going to be in a much stronger position with much stronger foundations. As you move through your late teens and your 20s, you're going to have different priorities, whether that's traveling, relocating, nights out, holidays, whatever it might be, and that's fine. However, just an awareness is enough, and that will, stand you in good stead.
And then the concept of credit score kind of annoys me, to be honest, because I remember checking, I think it's like, is it called Experian or something? And I looked whilst I was at uni, and it was high. It was in like the green kind of area. And I remember checking maybe 18 months later, and during that time, I'd considerably cut down my spending. So I was more financially savvy, and I'd cancelled all those subscriptions. I was tightening my belt a bit because I was getting towards the back end of uni. And I looked at it again, and my credit score had gone down. So it had a negative, so me being more financially savvy and spending less had a negative impact on my credit score. Why?
So this is my issue with credit scoring. I feel the exact same way you do. Credit scores are not as important as your credit report. For example, what mortgage lenders look at is the information within the report. So they want to see, have you missed any payments? When did those missed payments occur? When were they satisfied? What were the figures involved? How much debt do you have? What is your credit utilization? Any defaults, CCJs, etc. Mortgage lenders are not looking at a single credit score. They have their own system, and you need to meet their criteria in terms of the amount of missed payments, the figures, defaults, etc. Every different credit report provider will have a different scoring system. So if you were to speak to a friend and say, what's your credit score? What's your credit score? To a different friend, you could all have the exact same credit history and all have completely different credit scores. So it really isn't important as it's made out. There's so much online at the moment regarding credit scoring and insinuating that if you want a good enough credit score to buy a home, you need a master plan, you need to download this app. It simply isn't the case. If you can make all of your regular payments on time, if your level of debt is proportionate to your income and your credit utilization is managed, you will be in a position to access the vast majority of mortgage products on the market. Okay? You don't, if anybody's worried about their credit report or where that's going to leave them, just speak to a mortgage advisor. I look at them every day. I could let somebody know within a few minutes, what impact their credit report will have on them buying a home. If it is going to be an issue, I can give you some actionable steps of what you need to do. Using an app and, for me, speaking to an expert who actually looks at credit reports, but not only that, but looks at them in the context of a real life scenario, like buying a home, that helps.
Got it. So there's a difference then between the score and the credit report, and it's more important just to make sure that we're not messing it up and paying off our regular payments when we need to, and then having debt in proportion to the amount we're earning, which all sounds fairly basic. To be fair, I think most adults would understand that, which is good.
But that is the point. To have a credit report that's good enough for you to achieve financial goals such as buying a home, it is fairly basic, and that's all it needs to be.
If you've got a really bad credit report, let's say you had a phone bill or something that you just totally missed 3 months in a row, and the emails were going to your junk, you didn't see it, so it was a total mistake or whatever, that's now harmed it. How quickly can you turn it around, and what are some actions you can take to turn that around if needed?
Okay, so it depends on, it's a very complex scenario in terms of, it depends on the dates involved, it depends on the dates when it was satisfied, the figures involved, etc. However, my advice to each individual would be different. Sometimes my advice may be, okay, maybe take a credit card, put your groceries on, put your petrol on, and yeah, begin to rebuild your history in a positive light. Things such as registering for the electoral roll can improve credit scoring and improve your report. Sometimes my advice is do nothing apart from make your current payments on time for a certain period. That I'll give. That could be, depending on the scenario, that could be 6 months, 12 months, 24 months or more.
Got it. Okay. So let's say you've nailed the savings, you've got enough for what you think you could get or need as a deposit. You've got a good credit report, and you're considering buying, I think for most people, probably with a partner. What are some of the conversations or considerations you need to have if you're looking to buy a house with someone?
Okay, so one point would be speaking to a mortgage advisor and finding out jointly with both of your incomes, with your debts, because you may both have different amounts of debts, both of your credit histories will be considered, what you can achieve buying together, making sure that maybe one of you is not going to cause any problems for the other, because, that can happen. But as well as that, you need to have some serious conversations regarding how you want to split the deposit. How are you going to split the monthly mortgage payments? Whose responsibility they are? Because, when you buy a home together, this could be for a lot of people the first time that you are mixing your finances. That can cause financial stresses. It can cause problems. Open conversations and many conversations should hopefully help to alleviate that.
What are some of the awkward questions that people need to ask their partner?
So how much debt do you have? Do you have any bad credit history? I'll regularly speak to home buyers who may be buying as a couple, and one may say, I've got this much debt on a credit card. And the other person may say, I never knew you had that. And it can cause a little bit of an awkward moment, which I'm then present for. Somebody might have some bad credit history. You know what, maybe the year before I met you, I had a credit card and I simply didn't repay it on time. But now, all of a sudden, if you aren't aware of that, that's a very sudden and significant issue. So establishing how much do you earn? Because some couples, you may not be aware of that. How much do you earn? How much debt do you have? And do you have any bad credit?
And then, again, awkward question, but what's the potential exit strategy if you were to split up? And you both have the house. Obviously, most people will have amicable conversations. Others maybe not so. What considerations do you need to have before you start signing contracts and stuff and getting mortgages again beforehand?
Yeah, so a conversation that you will have with your solicitor when buying a home is whether you want to own the home as joint tenants or as tenants in common. As joint tenants, you are both responsible for 100% of the debt. Okay, and you both own 100% of the equity. As tenants in common, that's slightly different. It may be 60-40, it may be 70-30, and you may base that dependent on your incomes, your contributions, how much of a deposit that you've paid. That's a big conversation to have, and that means that if you ever do sell the property or split up, it's all documented, all of the legal side of things has been done properly, and you know exactly where you're going to stand if you do leave that relationship. And I actually posted on social media recently in relation to 5-year fixed term products that with my clients, the main reason why these products may become unsuitable after buying a home, it's not because it was a bad product. It's not because your goals have maybe changed. It's not because your finances have changed. It's because of relationship breakups. It happens every so often that somebody will contact me, they've bought a home together, everything seemed to be great, but then a year later, they've took a 5-year fix, a year later, Dan, we've split up, where does that leave us? It's important to really have some thorough conversations when buying with a partner to make sure you're both aligned and this is really what you want to do.
It's a lot of adult conversations and decisions to make, isn't it? Okay, so you've saved, you've had the conversations with your partner, you're now approaching a mortgage advisor such as yourself. Like, once you start working with people, what's their experience? Like, what do they actually go through when speaking to a mortgage advisor?
Okay, so first of all, it's never too early to speak to a mortgage advisor. Reason being, that initial conversation will just lay some solid foundations, give you an idea of your current circumstances, your income, your debt, how many children you have, your credit history, the sort of property price that you're hoping to buy. They'll let you know if your current circumstances are enough to achieve that.
And if just quickly on that then, so that's a one appointment then. Is that a couple of hours? Is it half an hour? What's the average cost for just a one-off appointment like that, for example?
Okay, so every mortgage advisor is different. So you will not be able to take that information as a mortgage advisor cannot give entirely specific or tailored or guaranteed advice until they've reviewed documentation. Okay, so that might be pay slips, bank statements, credit report, ID, etc. Okay, from a phone call on most occasions, I might be able to give you a pretty accurate indication, but for me to give any guarantees, I need to see documentation. Now, every mortgage advisor is different. The cost of a mortgage advisor for a residential purchase varies anywhere from £0 to £1,000. But not only does the cost vary, when the cost is payable also varies. So, for example, some advisors may charge at decision in principle, some at mortgage offer, some at completion. So it's important to establish what fees are payable and when they are payable. On most occasions, though, an initial mortgage appointment is absolutely free. It definitely is with myself. So yeah, an initial conversation, entirely free.
Cool. Good to know. Continue with the other stages then. You've mentioned loads of technical terms there that I have no idea what they are. So like, talk me through the process. You've had your initial call, an appointment, and then maybe a year later you're like, cool, I'm looking to buy a house now. I need to get a mortgage. I'm having a conversation with you. What happens?
Perfect. So if you're ready to buy and you're ready to get out there on the house hunt, you will need something called a decision in principle. A decision in principle is essentially a document from a mortgage lender stating we would consider lending to Adam X amount, and that includes a credit check. Okay. Now, if I give you that as a mortgage advisor, this is what I do every day. It will be accurate. Okay. Therefore, you know, when you're lying in bed scrolling on Rightmove or when you're actually viewing properties, all right, Dan's told me I can access this loan amount. This is how much it would cost. Therefore, if you see a property, you know whether or not it's achievable and it's no longer guesswork. Then if you do view a property and choose to make an offer, and if that offer is accepted, an estate agent will need that decision in principle in order to accept an offer from you. All right. So once you have an offer accepted for a property, let's just say as an example, you're working with myself, you would then come back to me, say, Dan, great news, offer accepted for this property. What we would do is we would have a catch-up call in which we discuss all of the specifics very thoroughly of your mortgage product. So we'd identify the best possible mortgage product. I'd recommend that. Hopefully we would agree on that. And then we would, look to move forward and submit a mortgage application. At that time, you're also going to need to consider things such as solicitors. You will need a solicitor to carry out all of the legal work associated with buying a home. Property survey. Property surveys are optional, but they are advisable. Reason being, you wouldn't buy a £450,000 car and not make sure it's got an MOT.
I studied building surveying at uni, so that was my job previously, is doing property surveys. So definitely get one.
Well, yes, I would have. Put it this way, I've always got one.
Yeah.
All right. So we will also discuss at that time insurances, life insurance, critical illness, income protection, making sure that, if anything ever was to happen, you can continue to pay your mortgage and you're not going to, become unable to pay the mortgage, unable to pay the bills, and therefore be left in financial distress.
Got it. So I'm going to you. We're having a conversation. I say, I'm looking for a house now. You're going to help me get a decision in principle, which confirms the amount of mortgage that I can actually get. I then go find a house, and then we then discuss some mortgage products. What do you mean by mortgage products? And is that in relation to banks, I'm assuming? Is it banks that give you mortgages?
So mortgage products are essentially mortgage deals.
Mm-hmm.
So it's an interest rate paired with a fee or no fee, and it might be a fixed deal, it might be a variable deal. So your mortgage product is your deal that you are choosing. Okay,
Yeah.
so every lender has many, many, many mortgage products. There's over 100 lenders on the market, so there's lots of mortgage products out there. Different rates, different fee arrangements. Some offer cashback, some are fixed, some are variable. Okay, sometimes people get confused between a mortgage product and a mortgage offer. The mortgage product is the deal. A mortgage offer is if I've submitted your mortgage application and the lender, so the bank or building society, has reviewed that and they've decided that you are a suitable applicant and the property is a suitable property, they will grant you your mortgage offer. At that time, your mortgage is essentially confirmed and you're ready to move forward with the purchase.
Got it. So mortgage products then are the deals that hundreds of lenders offer. Once they've then said, yeah, property looks good, you maybe as a couple look good, we're then going to give you the mortgage offer. And I'm guessing all at this point you're engaging with the solicitors to have some of the legal works done, you're getting the property survey done. If I had hair, you'd probably be losing all of your hair at this point because it sounds like there's a lot going on at this time. Is there anything else people need to be aware of from a kind of a mortgage perspective at this point?
What I would say is there is a lot going on. Okay, it is complex. When you're buying your first home, it can be a little bit of a stress. That's just sort of the nature of the beast. But that's why it's important to work with somebody or a mortgage advisor who you like, who you trust, who you're going to be happy sort of talking finances with. The mortgage advice role maybe in the past was quite transactional. In the modern day, it's a lot more relationship based. So, use myself as an example because I do so much social media. People will choose me as their mortgage advisor after following for months, listening to podcasts just like yours. And they've sort of thought, right, Dan maybe seems like a good lad. He seems to know what he's talking about. I've seen the clients he's worked with. Therefore, I want to work with Dan. And from that point, it's my job to hold their hand from that initial appointment all the way up until the day when they get the keys. That could be 3 months or 3 years. It's different for everybody. But it's a support system in place because it is complex. So I always say, I'm on your team. I'm in your corner. And yeah, I'm available for help when needed because, when you're buying a home, especially with parents, I always find I quite regularly get messages on WhatsApp off my home buyers. Dan, my dad's been watching the news. He's seeing this headline on the news. Now we're worried that the economy is going to crash and everything's going to go downhill. All right.
Every newsline every day.
Exactly. So it's from there. It's my job to put the mind at rest, and yeah, provide some sort of expert advice.
Sounds really good. And I feel like that, for me personally, is very much demystified the process because even at the start of this conversation, I couldn't tell you a single part of the process of what to do or how to save. What are the biggest either misconceptions or mistakes that you see people make when we're looking at that entire process that we've spoken about?
The overarching point is always a lack of preparation. It really is. Sometimes people will get in touch and say, Dan, I found this house. I want to buy it right now. They've never spoken to a mortgage advisor before. They've never downloaded a credit report. They've never really considered how much debt they've got on credit cards. And on some occasions, the conversation may be, unfortunately, you can't buy that house right now. Sometimes it works out. But yeah, sometimes we do have conversations where it's unfortunately, right now, you're not in a position and you might have to wait a certain period of time.
That's interesting. With everything that we've discussed, if there's one or two key takeaways, I always like the idea of what's the 20% things that you do that get the 80% return. If there's just a couple of things that people take away from this conversation, what should those takeaways be?
Okay, so it should be the three big ones are save your deposit, start early, utilize a lifetime ISA if suitable, speak to a mortgage advisor as soon as possible, have that conversation and lay some solid foundations, and don't make a mess of your credit history. Make your payments on time. If you do that, you'll be in a pretty strong position when the time comes.
Sounds so simple. Cool. If people want to follow, and I really do recommend people go and follow, because even in the last, 2-3 weeks I've been following you since we had that first discussion, the constant drip of information, even when you just scroll, halfway through a video or see some of the carousels that you do, you're almost just doing these little micro learns of bits of information. And even in the last 3 weeks, I felt less scared of all of these unknowns, and it's all by just kind of drip feeding this information. So I really do recommend people go and follow your social media, but obviously getting in touch with yourself as well. Where would you send them?
Yeah, so my main page is my Instagram page, which is at @dandoesmortgages_. On there, there's sort of daily tips, tricks, pieces of information, and some client stories from other people who I've helped. One last point to remember is maybe that if you are thinking of buying a home, either in the near future or in the distant future, everybody's circumstances are different. Everybody's goals are different. Sometimes there'll be a lot of pressure around what your friends are doing or what your parents achieved 25 years ago. Set your own goals and be comfortable with what you can achieve.
Nice one, Dan. And again, really do recommend that people go and follow your Instagram, because I've learned so much just in the last couple of weeks and also in today's conversation as well. So thank you very much for coming.
Thank you for having me.